This week on Moving Markets, the FBM KLCI is up for review, who's in and who's out. Apple launched its highly anticipated iPhone 12, but the stock slumped despite the fanfare. Wall Street's biggest banks posted earnings that paint a mixed picture, and Big Hit Entertainment, the company behind the South Korean pop phenomenon BTS, was a big hit on the stock market, no pun intended. Yes, we've been talking about the glove makers a lot, but this week, Supermax and Kossan Rubber made some gains based on the news that they may be included in the FBM KLCI because it's almost time for the KLCI's semi-annual review. This is when Bursa Malaysia evaluates who's in and who's out of the index to make sure it stays representative of the Malaysian market. Only 30 names make the cut each time. So Supermax and Kossan Rubber could be included in the index when the review comes into effect in late December. Now why? Because both their market caps have increased so much in recent months, but daily volume of the shares traded is also a factor of consideration when deciding who's in and who's out. The question then is, who might get bumped off? Some say it could be Genting, since the decimation of the tourism industry has caused this stock to suffer a major blow. Apple had a big launch this week, so we finally got a glimpse of the highly anticipated iPhone 12, which is 5G ready. Now, Apple isn't the first to enable 5G technology. Huawei and Samsung have already rolled out their 5G phones much earlier, but will Apple make this technology mainstream? Before we get too enthusiastic though, note that 5G has yet to be even rolled out widely around the world. So will people still rush to get it? The other thing that's new is the price. Apple ratcheted up the price of the iPhone by $130 to $829, and that is just for the basic model. Sure, higher selling prices means that Apple might make more money, but is there a ceiling price consumers are prepared to pay? And with Apple shares already up 65% year to date, has all this already been priced into the stock? Despite all the fanfare though, the stock slid as much as 4% after the event. Maybe investors were just expecting more, or maybe the mantra of buy the rumor, sell the fact holds true. This week, some of the biggest banks on Wall Street released their third quarter earnings, and it gives us a bit of a mixed picture of the sector. It's tough times ahead for the more commercial banks like Banks of America and Wells Fargo. Sure, both banks did better in this quarter than the last, which makes sense considering the American economy has been slowly stabilizing. But we are in an environment of ultra-low interest rates, which shows no signs of ending, which is bad for net interest income. And both Wells Fargo and Bank of America, the bulk of their revenue still comes from interest on loans. And if consumers aren't spending on their credit cards, aren't taking out loans, that doesn't bode well for these consumer-facing banks. But if you look at the investment banks like Goldman Sachs and Morgan Stanley, both did extremely well since the bulk of their revenue comes from the deal-making and trading. So the higher volatility in markets makes happy times for them. The South Korean boy band BTS has topped music charts across the world. They've also made a dynamite showing on the stock market. Big Hit Entertainment, the company that manages BTS, went public on Thursday in what was South Korea's largest IPO in 3 years. The stock climbed 90% on its first day of trading, and the company is now valued at over $8 billion. But what will happen to Big Hit, which gets a whopping 97% of its revenue from BTS, when its members enlist for the Korean Mandatory Military Service? And that is what's been moving markets this week.